Yeah, I'm losing my
We are
edge.
trying to take pairs trading all the way to 100. It's been kind of pairs trading week here from the small exchange, kind of like
Got a
Shark
great
Week.
set of segments. Kind of like Shark Week.
I would say of similar notoriety to Shark Week. Here was pairs trading week from the small exchange. Today we're talking about alternative stock markets, Pete. I've always been an alternative rock fan growing up. I know you hate the Twisted Toasters, which isn't even a band, but is kind of the pseudonym or just the name that you've given.
Bands. It's okay.
I like poser bands. I don't even know what to say to that. You prefer Karen Carpenter and
why do you make it so one-dimensional? There's lots of people.
Because who are the other ones? Give us some other.
No, I'm not going to share them with you. No, I'm going to keep them in the book.
Oh, see,
Fleetwood Mac, the Eagles.
Okay, yeah, Eagles are sick, and Fleetwood Mac is a little.
The Rolling Stones, lots of them, classic stuff. Nothing in the last 10 years. I can comfortably say that. I can comfortably
nothing in the last 10 years.
Actually, probably in the last 15. I could go back to 2005 and say in that window between that and now, nothing.
I'm just wondering what happened.
Good.
What happened in 2005? I have no clue. But I mean, Rolling Stones came out with a song a couple months ago. I think they came out with a song. I actually just got a notification on my phone that Goat's Head Soup is finally now available on Apple Music. So maybe I'll check that out. Yeah, I agree with you. There's a lot of great music from 15 years ago and beyond.
I like this. Our producer just chatted to me. Nothing from this century for Pete.
He likes some early 2000s indie music. Like he likes like LCD Sound System and the Strokes.
No, he said that's for me.
Oh yeah,
for you. Yeah.
Oh yeah, you don't like any of that stuff. But Pete, just like some people do like alternative rock music, some people do like alternative music in general. Hopefully, they're digging our alternative stock market. Is what I'm going for here, because the traditional stock market, the Rolling Stones of stock markets, if you will, while they still sell out Soldier Field, and I've heard still put on a great live show, even in the old age. When something that was innovative back in the 60s and 70s, like the Rolling Stones or the NASDAQ index, which I actually don't have a date for when the index itself was created, but the futures themselves have been created or have been trading, Pete, for decades now. Mm-hmm. It gets a little bit old. People want something new, and that's how underground rock and culture gets drummed up, and that's how small startup companies like ours here, why they come to fruition is to try to take this alternative take to something that a lot of people are interested, broadly speaking. And broadly speaking, within the NASDAQ, Pete, it's no secret that it's performed well in 2020 here, as they're barely off of those highs of 11,000, a price that if you had asked someone a couple of years ago or even 6 months ago if that was achievable.
What do you mean? A week ago we laughed at that. Absolutely. Absolutely. Oh, it's easier to say than 10,000. And there we go. It'll be interesting, Frank, to see when we go back in context at this 20 plus, almost 23% at one point move. Such an outlier historically and that's half a year. Such an outlier historically. Are we going to look at that as, well, that was the white whale? We didn't realize it, but you'll never see that again in your lifetime. Well, it's going to be really interesting to see that.
We're in the midst of kind of thinking that thought exactly. And I'm glad you brought it up with that context because, you talk about up 22, 23% at one point this year, up off of the lows of, honestly, since I started trading, March was probably the biggest crisis for trading purposes that I can recollect. And Pete, off of these lows, 40% bounce, Pete, in a matter of 3 or 4 months. I think that there's a good chance that we do look back at this as being a huge extreme, because when you tie in alternative stock markets like the small stock 75 or the Beatles of stock markets like the Dow Jones, I guess actually no, the Dow Jones would more be like the Buddy Guy or like Muddy Waters, kind of the older, because Dow Jones is even older. It's like blues rock is to rock and roll itself. Anyways, I'm getting too far downfield with that analogy. But even the Dow Jones, Pete, fighting to get back to positive. And you see this difference also as being, as we'll see in a second here, I'm going to crunch some numbers for everyone, the relative outperformance as being kind of an anomaly, something that we really, really don't see very often. We really don't see a 40% move from mid-March to July, a matter of a few months, a 40% rally. I don't know if that's ever happened in a stock market. And so, yeah, now comparing these more traditional stock markets in the NASDAQ to the alternative, you see a big up move in its own right, but almost a 30% gap between these, which, I mean, it's one thing, Pete, to compare Russell small cap stocks or compare emerging markets, Chinese stocks and Indian stocks and places that just different stocks in general. But these alternative stock markets like the small stock 75 and those other traditional stock markets like the Dow Jones and S&P 500 hold a lot of the same stocks as the NASDAQ. We've talked about this time and again. NASDAQ top 4 holdings, all 4 of them are in the small stock 75. Right. And those top 4 holdings of the NASDAQ are what's moving this thing to those highs by and large. But the difference in weighting and a difference in some of those stock names is driving some relative outperformance that we really rarely see. And getting to some of those numbers here, Pete, kind of honestly just crazy to look at. So 1 standard deviation difference between the small stock 75 and the NASDAQ. And this is going back to 2016, where we have index data for the small stock 75 index. The 1 standard deviation move here, this is all for 6 months, is about 8.5%. So what does that mean? That means over 6 months, what do we normally see these stock markets bounce back and forth between? Because, Pete, am I wrong, or are divergences among equity indices or commodities in the energy sector, or commodities in the metals sector, or interest rate products, divergences are normal, right?
Yeah, that the degree of the divergences are very, very interesting. We know that certain pairs have better long-term correlations, but everything diverges to a greater extent. Honestly, the pairs trades that probably consistently serve up the best are things that have a solid, plus 7.5, plus 7 correlation, and see divergences within. You can't get both. You can't get something that has 0.9 correlation and is diverged by 20%. Sure. You're by its nature, the correlation will break down. But yeah, there's absolutely, there's pieces you stay away from within the energy space. Does nat gas and crude perform very differently? Sure, nat gas at almost 20 cents away from its lifetime. I shouldn't say lifetime because it wasn't. It's 25-year lows. Crude back up, 30%. There's no correlation to be had, so no divergence to be traded. Here, it's very different, and these are very stark differences in correlation that in performance that really we wrestle sometimes with what's high and what's low. Here is a way to kind of take advantage of that and let the reversion as well as the direction play out in your favor.
Well, and so with along the lines of that correlation, Pete, the correlation, I calculated it yesterday night, between these two indices is at about 0.85, positive 0.85. And so that's real green. That's real positive for correlation between two markets. And I like what you kind of alluded to here with, excuse me, sorry, got to stop smoking cigarettes.
But those Newport Reds or not Virginia Slims are not doing you any favors, my friend.
But you kind of talked about this as being the degree of the divergence, right? And I would almost say the 1 standard deviation, that calculation, that measure is kind of telling me, all right, and I'm not a military man or anything like that, so I don't know if I'm using these correct. That's almost like a code yellow, where it gets to 8.5%. It's like, all right, something's going on here. Maybe let some people know there might be something that's happening. And then if you were to double that, and it's like, all right, small stock 75 and NASDAQ, they've gotten to 17, is that 17% difference here? That's like a code orange. It's like, all right, something weird is up here. Pete, to triple it here with a 28% difference as of yesterday's close. And it was NASDAQ gave a little bit back today, but actually has regained a good amount of it. 28% to me is like a code red. And I'm not in that world, but I think that code red is the craziest one.
You know what, General Caberna, I think you're spot on. I think it's DEFCON 1, but we can call it code red. Sure.
Okay.
I like that. So,
but yeah,
this is, so you know what, we want tools to be able to trade ideas. And we talked about the challenge of picking direction on the way up in some of these pieces. But here's, you know, I would always trade. I would trade time to be in a trade versus just getting paid the first day every time. And where are ways that I can extend the time it takes for me to be right rather than just, you know, banking on it, paying right away. And here's a case where taking these two with the statistical correlation and the divergence to the magnitude we've seen, this gives, in my mind, this gives you time to stay in a trade.
Well, I'm glad you brought that up because we're going to get to that time, and time is usually dictated by how much have I lost or made in this scenario, and we'll get to that in a second. That's how we're going to wrap this segment up here. But just a couple more highlights. The max difference here of 33% was actually, I think, Thursday or Friday of last week. So it's not like that huge difference was 2 or 3 years ago,
right,
and now they've gotten back to it. No, we're at the extreme in this market, relative to the one standard deviation, relative to the maximum it's ever been. We're sitting right around the maximum that it's ever been. So this is something that I'm very interested in. I know Tony Batista has been very interested in. Traders all over the place, very interested in this divergence. And you talk about extending time. And to me, extending time always means, all right, well, how can I flatten out my P&L fluctuations? How can I keep things at a manageable level? And here, what you're looking at is 1 NASDAQ to 4 small stock 75. That is the notionally equated ratio that we're looking at trading. And so if you wanted to get on the other side of this extreme, you would buy 4 of those SM75s and you would sell 1 NASDAQ. Now, here is, and this is actually a way that I'm starting to really like looking at it. Here is the notional chart, which is to say, this is what the this pairs trade of 4 small stock 75 to 1 NASDAQ looks like in dollar amounts. It got to a high here of $3,000 notionally of that 1 NASDAQ micro contract to 4 small stock 75. And starting out the year, the low was negative 3,000. So you've got this good movement around $0 difference notionally between the two sides of the trade here. And what's nice here is when it got first to this upside extreme, there's bouncing around here and a good trade back and forth that I know here in June when small stock 75 launched, a lot of people were looking at the NASDAQ to small stock 75. And what's really nice, Pete, is the bouncing around here is at its highs and lows, $1,000 range, something very manageable from day to day and week to week.
Right.
And then you look at this extreme here, and yes, we missed that extreme of last week, but where it's rests at right now is still this extreme for the last several months and years going back. So I still like this trade here, even though it's a little bit off. And really quickly, before getting your input, Pete, here is the notional chart of just a micro NASDAQ future. And what you're seeing here is a high to low range of $14,000 to $22,000. And the trade of that same time frame of, going back here, call it mid-March when they first found this extreme to now, this range of, $1,000, $2,000, $3,000. The range in NASDAQ from March to now is this $14,000 low to a $22,000 high. So we're talking about taking this trade, Pete, when you add that small stock 75 component onto the short micro Nasdaq, cutting it by 60-70% relative to this. I mean, this is just the chart of a micro Nasdaq alone. So
Right.
it's a cool little comparison here.
Yeah, absolutely. And I sure like I like the, we haven't done this before. Is looking at the dollar difference. And the small exchange products lend themselves really well to looking at extremes. I mean, we IV adjust them. A lot of times when we compare products, we get a funky one minus the other, and it becomes challenging to. It's another way. So I've got a trade idea. How do I visualize a trade idea? A lot of us are visual learners. Challenging. This is a great way to do it, though. So, all right. So I sold my mini Nasdaq at 10,600.
The Micro E-mini.
The Micro E-mini, and I'm going to underhedge and buy 3 of these.
You gotta just confuse the people a little bit.
All right, I'm buying 4. Fine.
Well, so and also
making you happy
to highlight the math up here. Why is there 2? It's not 2 contracts. It's $2 times the micro Nasdaq. That's the multiplier there. The big contract is 20. And then here with small stock 75, okay, why is it 400? Well, it's 4 contracts, and it's that simple $100 multiplier for that. And so, yeah, that's what gets you to this chart here of the notionally equated products and how are they moving around this zero bound here of exact notional equality there. And a range that a back and forth I like more than this chart. And Pete, a notional range. I mean, when you're talking about a futures product, Pete, or a futures trade here, a pairs, anything in the futures realm that over the last few months has moved from high to low, just about $3,000.
Right.
That's a real manageable trade here, because hopefully, you're getting in or out of this trade in the next couple hours to couple of days. And on a couple hour, couple day basis, it's a few $100 trade. And when you look at the NASDAQ, even the micro, the smallest version of NASDAQ futures, when you look at this alone, the high to low range is 300% of what that was. And we looked at it just earlier today. The intraday range on these micro NASDAQ is still $500 to $1,000, much larger. Like Pete said, it keeps you in this game longer, and it's a nice extreme here that we're looking at. I mean, a two or 3 times the normal one standard deviation move is pretty huge. So definitely something interesting to look at when you're throwing in the alternative stock market here in pairs trading week at the small exchange.